Bitcoin at $90,000. I told you it was going to reach new highs in this bull run. We knew about it, but many people were not accepting it. In fact, many were here selling their coins. I remember one guy at 63,000 or so said he was done with crypto. He sold because he wasn't really seeing the future, or he had more than enough money to be comfortable. The truth is, we spent from March, from the end of February until October, until November, well, October, we've spent almost half a year in a bearish or consolidation situation when we are in a bull market. It's pretty intense. We've never seen that before. Maybe we've seen it, but for the first time, we were very skeptical. Many users were shaken out of their positions here, but finally broke out in November. And in this video, I'm going to talk to you about the goals, where we want to sell, where Bitcoin is going to reach, and when do you sell. The most important thing is timing. When do you sell? When do you accumulate more? And until how much time we have until price drops down, like we've seen here. This is a very dangerous move right here, because this takes a ton of people out. So let's see. The most important question that we are in this all-time high is, when do we sell? When do we sell? Well, if you want to keep things simple, just go to 200,000 gold. I mean, per Bitcoin. $2,000 per Bitcoin, and set a sell target right there. Now, knowing how Bitcoin is, like here it went to 60,000, 69,000. Knowing how Bitcoin is, it may go to 190 here. That will be best case scenario. $190,000 per Bitcoin. That's a lot. But the truth is, it may do that in the best case scenario. And why do I say 190 or 200,000? For the simple reason that if we extend the Fibonacci and we see where it went in the previous market, we can predict something very interesting. Look here. This is the 2020 bull run. And price from the highest to the lowest. This is the bearish market ending, I believe. That went to a 3 times from 13,000 to 60,000. That was 3 or 4 times the price of the highest point. Or if you go to the lowest point, it was 3,900. So it was about a 10x or more. In either case, it reached this point, the 3 point whatever. So if we do the same, and we go to 20, well, the previous high, well, maybe we can consider this one too, right here. From the highest to the lowest, it went right there. Okay, this is the right one. From the highest point to the lowest, gave us the next target. If we do the same here, from the highest to the lowest, it gives us $224,000 per Bitcoin. That would be a very interesting target, and it's simply based on the fact that we repeated this previous cycle. That's how we do the next calculations. We don't know what's going to happen, but we predict that it's going to repeat the same things that it did in the past. That's our target based on the fact that it behaved like that in the past. Now, if you go to even sooner, this is, by the way, this is the Bitcoin all-time index. It's called BTC. If you write BTC index, it gives you the Bitcoin all-time history index, which has a ton of price history here. So the previous one was in 2012. So if we go to 2012, the highest was here and the lowest here. It went way beyond that point, so it reached $20,000. Now that's because Bitcoin was accelerating very quickly, so it's kind of unreliable, but still it's it's decent. Yet in the previous one, in this here, it was more established. This was all the result of COVID printing money. Here we may not see as much action because we don't have any crisis, anything that prints money. We have the new presidential election. Trump is in office, so that's something, but we don't know if it's going to reach the target that we set up or not. Conservatively, though, I would go for 100,000, 110,000 or so, and 150. Those will be nice targets that are very likely to be hit. 150,000 per Bitcoin. When will that be hit? That's another question. This is the answer to when we sell, because once price gets to those points, that's when you sell. You don't wait around. You don't expect more movements to happen. So when do we think that will be reached? Well, in the previous bull run, it was in April 2021, meaning April 2025. It's not exact. We don't know the exact dates, but it's close to that date. Or if you want to wait further before it continues, it retraces again, and that will be the end of 2021, November to be precise. So November 2025. Right here. These are the 2 points where Bitcoin is going to hit. It's going to give us our targets. My idea is that this may go here, all the way here in November, and well, maybe even further, and then it hits here. But in order to reach those huge targets, there's a lot of energy that needs to be created. Right now it's 90,000 and it moved just a little. And we've seen a huge euphoric rise in people. They were all very euphoric, which is not a good sign. You don't want people to be this excited, because that gives, creates a shift in the market. And when people are euphoric, that's when you sell. In either case, this is the likely target, 100,000. That is going to happen no matter what. 150, probably yes, but we'll have to see. Right now, we are in November. So when do you sell? Like I said, in April or before, maybe February 2025 of the next year, so in about 3 months, that's when you sell. Or if you want to wait until the end of the year, November. So you sell in Q1, quarter one, or in Q4 on the fourth quarter. The quarters in the middle, Q2 and Q3, those are not very active as we've seen in the past. If we take a look at the 2017 bull run, which is the most significant bull run before the 2020, we see that in December we hit the high. So that is a period of a lot of euphoric energy. And this was in 2027, meaning 2025, that would be for us. So at the end of the year of 2025, the idea is you sell at the last quarter of the year. You can wait as long as you want, but we gotta take into consideration our targets. If price goes into 150,000, we sell. If price hits 200,000, we sell. It's very, very unlikely that it goes to 300,000. I doubt it. Not in this market, but it could happen, right? We don't know anything. The likely targets, like I said, 150,000 and 200,000. But conservatively, if you want to make sure that you hit 100,000, that is pretty much guaranteed. $100,000 per Bitcoin, yes. So this was, just to give you an example, this was in November. This was the 2016 bull run in November, which is where we are right now. We see that price is beginning to rise, like it got very close to the high. Then it dipped back into the breaker here, and it continued up massively. But in November, it was already rising, and in December, the same thing. It was very high, and then in January, that's when we dipped. But then in March, again, March was when the first high was established. The same thing happened in 2020. March or April, that's when you want to sell because there will be a huge dip to create people to exit before the final move, which is when price goes crazy, parabolic. And Bitcoin in 2017 was crazy. It was moving for the entire year up with very small dips. It went from $100 to $20,000, and it didn't reach 20,000. You see, they like to do this thing. They would like to trap all these sellers. You gotta always pay attention to the market makers because they won't allow price to go and touch 20,000 because that's when people set their targets, right? Whoever's in there, they will set it to maybe 10,000, maybe 20,000, but they won't allow you to exit there. So you gotta be careful and close it a bit earlier, maybe 19,000 or 18,000. Those will be great because that's when you know you will be almost guaranteed to hit. And in that will be 17, the end of the year of 2017. That will be the next year after the halving, which is 2025 for us. And then we see a rapid drop. When you see something like this, you gotta run, man. If you see the first huge candle, this is the weekly candle. If you see a huge week, which bearish after reaching massive targets, that's when you sell. No matter where in this candle, you gotta sell here. That's in December. So at the same time, the all-time highs created a huge sell pressure is also created. That's when you gotta sell and be quick to exit. Then price went up and down. Well, this is the bearish market from January to the entire year of 2028. And then 2019 had a few increases, a few drops, and I guess this was in Q3. Yes, Q3. Then in Q4 we begin to see that. In Q4 it was also very negative. That's because it's in the bear market. And then 2020 is when it begins to raise up in the Q2 until here, which is where we see. So now we are in November. What do we expect? If you go to the monthly chart, you want to pay attention and understand where we are at. We are in November. We have printed a huge bullish candle. Do we sell here? Many people will want to sell, but the truth is, look at this. November, December, there's a huge bullish candle. January, February, March, those are all positive. Like until you see a doji like this, until you see the first negative month, that's when you sell. In fact, you could hold until December. A good strategy will be keep holding from November, December, January, February, March, until you see a bearish candle. It can be either one, this one, a doji, or this other bearish candle, because that will allow you to maximize your earnings. This candle started like this and it went hugely down. It went literally half the price. So if we reach 100,000 or 150,000, price may drop into 70K. I guess this area, it's very attractive. This level, 70K, is going to be a target when it dips. Not if, but when it dips. That will get a lot of people out. And when we see the fair value gap being consumed, like I talked in my previous videos, when we see the fair value gap being consumed, that's when we enter long right here in this point. I don't know if you can see it, but see there's a fair value gap right here, a bearish one, and a bullish one. So that's a good sign. But the most important thing is that this candle created a huge space right here, and it wasn't taken out until this candle in October 21, where here you want to buy. That's because that's when you can enter, and you can set your stop loss right here, so you can enter back again and target this high, which is exactly what happened. That will be an extra trade if you want to consider that. And when do you sell? Well, at the first bearish candle, or look at the fair value gaps in the monthly chart. And when that is taken, there's a very small gap, but that still counts. When that is taken in the second consecutive bearish, that's when you sell. But I will set a target right here and then exit. In this case, what will happen is that we may see the same thing, or it may spike and drop like it did before in 2018. No, 2017. So what it did is that in 2020, it did something like this. But in either case, after hitting a huge target, which could be 150,000 or 100,000 or maybe 200,000, we see a dip. And you may want to buy here and sell here. It depends on how strong that dip is. In either case, it depends on the fair value gaps being created. If there is a gap here, a bearish gap, and you see price is hanging around, you don't buy until you see the fair value gap being consumed with a candle, and then you buy until this target is consumed, which is exactly what happened in 2020. There was a gap created here, price consumed that, and you enter right when price is consuming that, target the next area, and you set your stop loss right here. I know it's a lot, but I wanted to share with you what I thought and how to play out this bullish market, because a lot of attention was created here. A lot of people were paying attention to how markets are moving, and many of them were disappointed because they exited right here in this consolidation. There were a lot of people selling here, believe me, a lot right here. And here, that was a good opportunity. If you bought at any point in this consolidation, you would have made money. And that consolidation was solid, was bullish, because this area was untouched. Had we seen the following candle closing below and then another one, that would be very bearish. We would target this area right here. But that didn't happen. Price was very bullish. By the rejection, you see it's throwing wicks. All the wicks that is telling us, okay, there's a lot of people buying here quickly. So this was created by market makers to get more Bitcoin. They were buying all of the Bitcoin here. Then in November it jumped, and in December I believe it's going to continue up. And this is the monthly candle. You got to pay attention to the big picture, monthly candles. In December we are going to be bullish, and since we are bullish because we've seen it in the previous markets, since we are bullish in December, there is no other place to go but to reach 100,000 or more. So I will hold my Bitcoin right here. If it gets here, you can take some off, or you can wait until a monthly bearish candle is printed, because when the move starts, it's until the bearish candle is printed. So you stay holding for however long it takes, for however months price wants to continue. In this case, it was from October, November, December, January, February, and March. In April, that's when it topped the price and started bringing down. And that's the first candle that we've seen bearish. So what you look for here, you keep your eyes on the monthly candle. Doesn't matter if price dips, creating these huge wicks. It doesn't matter if it's moving around. What you want to do is hold and buy if you can during this time where price is bullish and bullish. We don't know how many months it's going to be bullish. It can be until March, like we've seen here, or April. If that is the case, you keep buying and holding. That will print the first target, which may be 150,000, because if we continue to create these huge candles, we may go 150 or more. In any case, we wait for that monthly candle to sell, which will happen somewhere in the Q1 and Q2 of 2025. Let me repeat that. We sell when we see a bearish monthly candle at the beginning of 2025. So it can be February, it can be March, it can be April. That's when you sell. I mean, this is not financial advice, by the way. This is just my perspective on it. Since we are very bullish and price has started to run crazily, that's how you play out. You don't want to exit here early because we know our previous experience tells us that price is likely to continue up. In fact, here you see October, November, December. It went until December and stopped in January. You may want to sell in December, but the truth is you don't know. If you were to sell here, you may not know about that, but that's why it's important to play your targets. In my case, there are 100,000, 150,000, and maybe 200,000 if we see price going all out. It's important to play your targets and remembering that it stops at close the target. If we see the price is struggling to get into 150 and it stops at 147, let's say, but usually they go to 149. If we see a huge rejection, that's when we stop. Let's take a look at the daily chart of the previous bull run, the most recent one in 2020. Here we see a lot of drops, but this is not interesting to us yet. Here is where we are at the beginning of the year. Yeah, we see all these drops, you see. From January, it was bearish all month until February. So you can expect that Bitcoin in December slows down a bit. But if you were to sell in December, you would lose a lot of your potential gains because it continued to go up. What was the sign? If you want to trade it daily, I don't recommend it, to be honest, because it's more risky. You can exit and enter at the wrong time. But if you were to trade your daily chart, I would recommend the following. Simply look at fair value gaps that are created. In this case, there's one clear here. See, a gap in between those wicks. And the moment price closes, body closes, like we've seen here, that's when we go bearish. You see exactly when price closed below it, that's when it went bearish. The same thing can be applied to the opposite side where candles are overtaking the bearish candle, the bearish fair value gap. But in this case, it was a weak close. Yes, it did close above it, but it was a weak close. And we know based on the time that we are at the end of December, so we expect some time of correction. And we see this happening. So when you see this happening, you gotta set your targets. I wouldn't recommend going short, but I would take some of my positions off if I were you. And we will set some conservative targets, not more than 1-to-1 ratio. It's very risky to enter short here. In either case, you may want to hold until the next fair value gap is hit and buy somewhere in that area. You will look for bearish fair value gaps, but see, we don't see any here that are consumed and taken. There's a lot of wicks, so we don't see a clear move here. We may want to go into the 4-hour chart. Let me bring it together. I don't know if this will let me go there. Let's go to the daily. And this was in 2020, right here. So yeah, that's the idea. You see December, there's that week, that day where price goes down. People sell at the end of the year. for tax purposes or whatever. And then we see the money come back at the start of the year. And this is because of taxes, right? People sell at a loss or a profit, depending on their situation, so that those earnings are accounted for tax purposes. Well, I'm not an expert on that. I don't know why people sell or buy. I would like to investigate that further. But the truth is, there's a lot of movement at the end of the year. So you may want to pay attention and see if it makes sense for you to sell or buy more. Definitely, I wouldn't recommend buying here at the end of the year, just simply holding what you have. Do I recommend selling? Well, that's up to you. But in my opinion, I wouldn't sell until I see a monthly candle going down. There's a lot of, if you take a look at the daily chart, you are going to be, let's say, confused or taken by your emotions because there are retracements. This was a 1 month retracement from the start of January to the end of January. It was down. And those can make you feel like, okay, price is done. We reached our target, which is 40,000 or whatever. And then we exited. But the thing is, we haven't. Another important point is that we went, if imagine this is our bull run and we reached this point. Imagine we don't know the price next. I wouldn't call it the top because it's 41,000, meaning it reached 40,000. It went above 40,000. If we stopped at 39,000, that would be more concerning because it's a massive difference. It would, all the people that wanted to hit 40,000 would be stuck in there and they would take their money. They would close all the positions. So the fact is, my point is the fact that we went above 40,000 means that likely wasn't the target and price is not done yet. See what I said? Since we went above the key level, in this case 40,000, that means price is still not done because otherwise that allowed a lot of people to exit. And they want people in the markets to extract their money, like the market makers. That's what they want to do. So it's very important to pay attention and see, okay, if we go to 150,000, do we go above 150 or do we stop at 149? If we stop at 149, that likely means, it depends on the time, right? If we stop there at the end of the year, that may indicate that it's the end of the bull run, the top, the all-time high, because market makers want to trap people in. If I were a market maker, I would not hit the target, which is 40,000, 60,000 or 70,000. I would get as close as possible and then drop, because that would trap a lot of people and you will be able to exit without them being allowed to exit. Try to repeat that multiple times until it makes sense to you. Here, see, that's the point. Here we stopped at 58,000. That could be the top, but it still continued. 61,000 to be the top, but it wasn't. And here 66,000. In fact, that was the top for the start of the year, but then price came back and it hit 69,000. That was the real top, so 68,000. So how do we play this? How do you make sense of this? Well, simply start to simply study the monthly chart, see if we are bullish. If there's a bearish candle, that's when you stop and you wait, or you sell, of course. But if price has been bullish and still no bearish candles have been printed, then we continue to hold or not buy, because price is very expensive at that point. But yet we definitely want to hold as long as monthly candles are still positive. because if you go to the daily chart, you will get a bit distracted by it. You can, like I said, take a look at fair value gaps, see when they are consumed. That's when we see a retracement. We've seen that here. We can mark that up. This is not perfect, of course, this is just a system, but if you take a look at the bullish fair value gaps, when they are consumed, that's when we see retracements. Here, here, another one here. You want them to form closed at the top of the pricing here. There was a lot of liquidity being swept at the top of this level, and then this was taken. Same here, a lot of liquidity was taken, and then the fair value gap was taken. Same thing here, and those were the retracements. And here there's barely one, but still it counted. So you gotta apply time, understand when the critical levels are close to happening. You gotta understand the fact that price starts to round up, to go down. You see this curve being generated. It's, if you were to draw this, it would look like that. It goes up, 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 and then slows on, goes down. It's rare, very rare, that price goes up like this and then does like a sharp drop. That's not common. In any case, let's see how Bitcoin behaved in 2017 or 16, which is where we are at. 16 is around here. So November. In this case, yes, there was a big drop. Price was more volatile because there was less liquidity there. Right now, price is more stable because there's a lot more money to move around, and we know that that will cause price to be more slow and less reactive like this. But the same principles apply. We see a bullish fair value gap that is taken, and we go short, we sell, we close our positions or whatever, and then we rebuy at a breaker or whatever situation you want to see. In this case, we see a bearish fair value gap being taken. This indicates the return of the bullishness. This was at the end of the year, so you gotta pay attention to those things. If you're gonna trade the daily chart, mark bullish fair value gaps, see when they are consumed after hitting an all-time high. And when they are consumed, which is in here, the moment here they are consumed, that's when you exit or short or whatever you do. But I would recommend not to go short because you don't know how long it will take. And usually when there is a bullish trend, the bearish dips are very short-lived. So here it was just barely a few days, and then you see all the bullish movement here, all the positive momentum up. So again, another fair value gap that is consumed here. And when price overtook that here, right there in April, that's when it continued to go. So you gotta play fair value gaps if you trade like that. But it's difficult because prices here, it's very, very volatile. In recent years, it's become more stable. But same thing here, you see the top, this is December. The top was consumed right here. And it reached $19,900. $19,900. So it didn't touch $20,000. And we saw that move here. When we reach those critical dates, that's when you may want to pay attention to the daily chart. I wouldn't go into the 4-hour, 1 hour, or 15-minute chart. I wouldn't even take a look at those because they're too noisy. And you know what to do. You just gotta pay attention to those key levels. Nobody here, when it was less than 1,000, nobody knew that it was gonna go to $20,000. It's impossible to know, right? So what you do is you take a look at the fair value gaps when they are consumed at critical levels here. It's a critical level. And by critical level, I mean when there are new all-time highs being created, when a ton of liquidity was consumed, that's when you look for those targets. This is how you play it out, man. And of course, the bearish market was very slow. It was painfully slow. 2028, 2000 in 2018. So it went very slow. This is the daily chart. You see how slow it feels? That's because that's how it is. And it went down all the way there. I calculated the percentages in the video that I made before. And that video was at the start of the year, I believe. It highlights all the potential numbers that we may reach. I'm not going to do the math here, but that tells one what types of numbers we can reach. But yeah, just from this video, you can understand that Bitcoin is headed towards 150, maybe 100, but 150 would be a nice target because there is a lot of room to go here. And even though it feels like a lot right here, you gotta take into consideration the fact that here, you see this will be like the previous target. It's like we are here. And yet price continued to create new and new massive highs. Well, it's like we were here. Right? It's like right now it's like we are here. But price continued to duplicate and triplicate the current price. Literally went from 20,000, which is right here, to 60,000. That's a lot. In this case, duplicating, that would be 180,000. So that would be a very nice target. I wouldn't risk it and go more than that, but definitely not 300,000. I don't see 300,000 at all. Not in this bull run. Some people are calling for that. No, that's not. It's not going to 500,000, not 1,000,000. No, those are ridiculous targets. Unless something big were to happen and trillions of dollars were to be printed again, then that may have a chance. But right now we don't see that happening, much less with Trump. So my point is, those are reasonable targets, 150, 190. If you want to be conservative, go to 100. You can't go wrong going to those numbers because in either case, in the bearish market, which is going to be in 2026 and 2027, those are going to be very long months and days of just devastating price action, going down and down and down for new lows until it hits 70,000, maybe even 40,000. This will be a nice target for the next bear market, which is in 2027 or 28. That's when price will be here, 2028. So if we set the chart, it will be here. And that tells us that Bitcoin is not going to 16,000. We are not going to see Bitcoin at 16 or 15,000 ever again, unless something major were to happen, unless Bitcoin were to be destroyed, hacked, or whatever. We're not going to see that. So that's very unlikely. And this target looks very, very attractive for the next bear market. Like here, you see, there was a clear target. Price went below it and further. That was in 2022, at the end of 2022. In our case, that will be the end of 2026. So something like it. So yeah, man, it's just my perspective. Take this with a grain of salt. Try to do your own analysis, but this is what I think. Just pay attention to the time. Are we at the end of the year? Are we in March or April? Are we at the end of the next year? So those will be the key dates. At the end of this year, which is November, December, even January, you gotta pay attention to see local targets, local highs being hit. Then March, April, which is when this was created. Well, no, which is where the price stopped. So you want to pay attention from here, from right now, November 2024, until March. So it's a whole period of time where price is going to be bouncing around, but it will tend positive based on the previous highs. And then at the end of the year, so those are the only times where you sell. And when do you buy back? In June, July. Those are the perfect dates for buying. June, July. Now, it may not happen, right, if we repeat it 2027. If we repeat the 2027 situation, we can not buy in, hold on, this was 2021, July, June, July. This will be 20. Yeah, June, July. Okay, here. Okay, yeah. June, July is when you buy back. See, this is right, this dip right here, that was the bear dip. It was at the end of the year, I mean, in the middle of the year, June, July. That's when you buy. If you were to buy in any of those periods, you would benefit a lot. Like same thing here, June, July. If you were to buy, you would go for that target. So in June, July, which is right here, you're gonna be interested in buying. Maybe price is gonna hover around here, but in either case, I don't expect price to move as drastically as it did before, from 1,000 to 20,000. That is a 20x. That was the first one, and here it went from 4,000 or 3,000 to 60,000. That would be 15x, something like that. If we were to go to a 10x, 16,000, 160 will be the target. 160. That's a very nice target if you want to risk it. That's up to you, of course. But that would be a very nice target. Something around this area will be a exit area. You see, there's a lot of space to go there, and it has to hit there until before March. So we don't have much time, right? March, April. That is when we want to exit. Of course, you may want to exit in December, which is what happened here. But now that's December 2020. So the actual target will be reached at the end of the year. So right here, November, December, that's when the second push up happens. November, December, that is when the target hits. And for now, we only want to go here 100,000. If price struggles to go up there, then I wouldn't be as hopeful to hit 200,000, because it depends on how much energy price has. Anyway, that's all I wanted to share with you. Make sure to rewatch this video, share it with your best friend, with your father or some parent, or your brothers and sisters, because they may benefit from this. That will allow them to understand the price of Bitcoin and overall the cryptocurrency market. I haven't talked about Bitcoin dominance or stablecoin dominance or meme coins at all. This is just an overall idea of the market, because Bitcoin is most of the market, to be fair. With this, you can do a lot of things. Hope you like this. This is not financial advice. Make sure to like, subscribe, join my email list, join MEVDAO, my Telegram group, get my sniper bot, MEVDAO.org, and subscribe. If you like this video, make sure to let me know what you think about it and what would you like to see next, Susan?